Glad you guys joined us today. Percy and I are out at one of our favorite places. This is the Shacks at Austin Ranch. It's an off-leash dog park. It's got food, it's got beer, it's got wine, everything that you could enjoy on a Memorial Day weekend, which is what we're doing right now. So this month I've been talking about big purchases, big items. Last week I put out a video about how to buy a car and put yourself in the best position. This week, I'm going to be talking about buying, whether it's your first time buying a home or you've been a long time purchaser and had many homes under your belt. It's good to sit back and ask some questions and learn a little bit about the best way to get out there and purchase so that you keep more money in your pocket, which is ultimately what it's all about. Now, I'm here with a good friend of mine. Now, we've been friends for about 15 years, and he is a realtor, he's a real estate professional. Now, I will tell you, Mario Carbajal, um, he's got a unique perspective, and here's why. He hasn't been doing the real estate business his entire life. He was just like you and I, going out there and trying to find our property, our new home. Then he got into doing some real estate investment. Then he became a part-time realtor. Then not too long ago, he went full force, full-time realtor. And I will tell you, in the time that I've known him, he probably is one of the people that acts with the most integrity that I've ever met. Why he still wants to hang around me sometimes, I don't know. But I'm really happy to have Mario Carbajal here with me.
How
Um,
you doing?
so Mario, the
Yeah.
first question is, like, how many times a day when you're showing houses do you say it's an open concept?
I try not to say open concept, but I sometimes will say, "Look how open it is. It's got a big open space."
uh, really, when we're talking to people that may be first time home buyers, they may have bought a few homes. So what is one of the things that when you are talking with somebody that you really wish they knew, something that somebody getting out there should know before they even contact their realtor?
Uh, what I think they should do is be pre-approved. It's different from being pre-qualified. Pre-approved, you've gone through a lot of the steps already to get your loan in process and all that. And most of the time, we are just beginning that step. They say they're pre-approved, but they're actually pre-qualified. And then by the time they get all their information out there, it just takes a lot longer because they weren't pre-approved. So that's one of the big things.
Cool. So, like, about going through the process of the truth of the matter is, look, everybody wants to do a deal. Everybody wants to get the deal. They want you in your house. You want to be in the house. The realtors want to sell you the house. The realtors on the showing side, they want to sell the house. Everybody in the process wants to get this done. But starting with the money, because it's going to also end with the money.
All right.
That's some really great advice. So it's great. Starting with the money is perfect. But one of the things when you get out there, finding somebody that you trust, finding a real estate professional,
Mhm.
what should they consider when they are interviewing somebody that's going to help them buy what is potentially the biggest investment of their life?
I think the biggest thing is just developing a relationship and building trust. What kind of marketing plan do they have? What are the steps they're going to take as you're taking them through the process? You want to make it easy. Your goal as an agent, my goal as an agent, is to try to make it as easy as possible, and so they are aware of what's going to happen, and there's not any big surprises. And so that's what I think is it's about. It's about building that trust, being comfortable with each other, and being honest with each other, and integrity, all the way. I think that's huge in the relationship building.
Right, because it's gonna be a process.
Correct.
You're gonna get to know each other, and the better that relationship is, probably the better
Mhm.
you can direct them and show them into homes that's gonna fit them more,
Correct.
as opposed to what you wanna sell them, something that they actually wanna buy.
Yeah. Yeah.
So, cool,
Absolutely.
cool, love
Absolutely.
that. Hey, so it's awesome, we're at the dog park, and we got many people, many other pups coming and say hi to Percy. Oh, well, Mario, you started off talking about pre-approvals.
Mhm.
Are there some pitfalls, some things that you have seen that you've dealt with your clients, that you'd wish they had gotten together with their mortgage professional, or
Yeah, I have found that there's a there's a small uh, or I mean, I don't know how big it is, but there are people out there that have either like gone through a divorce, and that maybe the spouse or something hadn't worked for a long time, and then now they're divorced. They need to start completely over. And so my thing is, what products or what do y'all have for those types of people who are just beginning to get into the set to the workforce, and when they have a little bit of money that they might have received from the divorce settlement, but they may not be making enough money to for a mortgage at that time because they're just beginning. I
Right.
mean, is there any other programs or things that you might have for them?
Well, that's I mean, that's a great question because there's so many different products out there, and I call them products. And I probably shouldn't because we're talking about money. We're talking about your life, but you have many different versions of how you can get a loan done. And generally the most for somebody who's getting started out or might have had some issues.
Hmm.
The FHA loans are very flexible in your credit, in your time, in who you are, but there's specific cost in them. The conventional loans generally are going to want to see a couple years history. They're going to want to see stuff. But here's one thing that's really important when you are talking with a mortgage professional. It is about honesty. It's about because it's all going to wash out. We're going to see it all. We're going to be pulling credit. We're going to be making phone calls. We're going to be verifying data and being honest with the person that is trying to help you get that money for that home loan. Um, is a really first step, a really great step. Now there are private lenders. There are companies like a lot of credit unions, and this is not known. A lot of credit unions do this. See, they keep your loan. They're
Okay,
not selling
selling
it
it.
on the secondary market, which means they have a little bit more flexibility, because I'm not trying to fit you into a box that is an FHA box or it is a conventional box because those are being packaged and sold on the secondary market. If I am truly a lender that I'm holding the loan, I can kind of make my own choices. Now I have to be responsible within
Right,
that.
right.
So one thing is like really getting to know who you're dealing with and what their product lines are. Um, Now, if you don't have a lot of history or you're new, it doesn't mean that's a no. It just means that there's some steps that we may have to go through. And getting started earlier with a mortgage professional that can help you on that line. I can tell you some of my best customers when I owned a mortgage company. Some of my best customers were the people that I told no first, but then I gave them a guideline on how to get to where they want to go. And that would be somebody that you could trust. Are they just saying no and walking away to that next deal to
Mm,
make money? Or are they helping you learn how to get to the goal that you want?
that's good. That's
Um,
good.
that makes sense?
Absolutely, yeah.
Hmm.
It's a plan to get there, so that's good
Yeah,
to
yeah.
follow that plan.
Because
Mhm.
we all want the American dream. We
That's
all
correct.
want the dream of our home. We all want to have that place that we can call our own and that we can make it our own. It's who's going to partner with you to get you to that. And they're not just selling you a because
Yeah,
let's face it, the business of other people's money, it's tough.
yeah.
It's a tough business because it's money to make money. And that's actually another thing that I want to leave you with here on the mortgage side of it is we have to understand that these guys are selling you a loan and they're making money off of that loan amount. It's really important to understand. The more, the higher the loan amount, the more the individual makes. So look at how they're paid. Look at the structure of them. Because if you wanted to get a $250,000 loan, but I could qualify you for a 300,000, I make more money on that extra 50,000 because my percentage is based on the total loan amount. That's something really important to know.
It is. So, Charles, why is it that there's so much paperwork? I mean, it's more paperwork when you're buying a home than it is when you are adopting a child, for example.
I mean, there's a lot of paperwork, and let's face it. So those home mortgages are generally for 30 years. You hope you only have your child in your house for about 18. So obviously, we have to have more.
Yeah,
No, that's not the true answer.
yeah.
Look, there's a lot of things. Even on your side in the real
Hmm.
estate, you have to have everything in place because let's face it, we are taking a property and we are paying people, and we're paying multiple different people. Like the money's going all sorts of places. We have to have everything in place, and we are transferring that ownership of that property, the legal ownership of that property from one person to another.
Mhm.
And it needs to be solid. It needs to be airtight because the last thing you want is to get 10 years down the road and you've been paying for it and somebody to come up and say, I actually have rights to this property. And
Right.
I think that's really where a strong real estate professional comes in to make sure that all those I's are dotted and T's are crossed.
Absolutely. I mean, and that's just part of the business now. There's some a contract is very long. You know, the lender piece is very long. Then you have the title piece to make sure that there isn't any type of issues with that particular title. That's a process as well. So many different processes, and I try to at least tell my clients that there's going to be quite a bit of paperwork and just to be ready for that
Right. So
because
just,
that's huge. Yeah.
stretch out your fingers, get them limbed up because you're going to be signing a lot of documents. One thing that I would recommend is you need to make sure that you have somebody that's a professional that knows how to explain what you're signing. Don't just sign it just to sign it. Just to sign it because you see the goal of that home. You need to understand those documents that you're signing.
Yeah, yeah, I agree. I agree. It's important to know, what you're signing. So it's good, to go through the different steps of it. Even though it's a long process, I think it's just very helpful to know what it is that you're signing.
Yeah, let's say it's completely worth it. Look, there is a time and there's a process. One of the most important things is that you have it done properly and that you know that that is yours. And there's no question about it. And the loan is the right loan, is the things that you expected. There's nothing hidden.
Correct.
And
Correct.
let's face it, and then your property is your property. It's not encroaching on somebody else's property or theirs not encroaching on you, which is going to be a legal battle down the line. So
Yeah.
all of these things are important to step
Yeah.
through.
Absolutely. Charles, I have a question. Is what are underwriters really looking for? I know they have quite a bit of things that they have to go through. Um, I, I've got a new build right now that's being purchased, and the person that's buying that particular one, he's not a first time homeowner, but they have asked him for documents and things and stuff, and he's got everything intact, but he's always got to sign, do a letter, do all these things, and I'm pretty sure I think I know the answer, and it just depends on the lender and the bank or whomever is giving the money. There's a lot of checks to be done.
Well, that's right. It depends on the lender. It depends on the loan product, what type of product, because they're going to all ask for a little bit different things. It's going to depend on the individual. Look, everybody's credit profile is different. It's like a thumbprint. It's not the same. So uh, the underwriter is really looking for things to make the case for you. It's about saying yes. And every item that you tell your realtor or you tell your mortgage professional, look, we have to answer to those things. Um, we have to answer it and show documentation that this is why, because eventually this loan is going to be packaged up. Your house is going to be packaged up into a file and it's going to go and it's going to be on the market. It's going to be on the secondary market. It's going to be, there's going to be investors that are going to put money into that. And that's how it goes. Yeah, Percy didn't like that. Um, the so it has to be packaged up nicely to go along with other loans that are similar because there are investors that are putting money into that. And each underwriter is looking for that item to answer to whatever. If my income is $150,000 a year, then I need to have the documentation to show that. If I was in a divorce, but that property is no longer mine, I need to have documentation to show that that property actually belongs to my ex-wife or
Yeah.
whatever it may be. Um, Everything that we learn in the process, we need to document to
Mhm.
to prove that. So when we package it up, somebody knows, an investor knows exactly what they're getting. Uh,
And that's good because sometimes I tell my clients, I said, hey, there's going to be questions that they may ask you that might sound silly. Answer them because that's part of their process in order to get through. So just go ahead and answer them. They want a letter for something, just write that letter, and it'll make the process easier.
right.
Yeah.
Ultimately, we all are in the business to sell a mortgage loan,
Mhm.
sell a house,
Correct.
well, not just sell it, to close it,
Yep.
because if we don't, we are not making money. And
Sure.
that's what ultimately it is about. That's why the business is there, so that we earn a living by helping other people out. Now, that's good for you because it doesn't mean that we're just walking away willy nilly. We are invested in this with you. So,
Hmm.
so Mario, here's one for you.
Okay.
So, look, this is something that I have actually been seeing on TikTok and Reels about qualifying for a loan and what you can actually qualifying, and then the truth of being financially ready for this mortgage loan.
Yep.
What do you see the difference in those two things are?
I think sometimes one of the big differences is that being ready means not only do you have enough money for the down payment and for that for to close the loan, but that you have money to last you for your emergency money, 6 months worth of expenses ready and set. That's being financially ready, because now you're ready for the home loan. You're going to want to buy things, and you want to make sure that you have enough money and not using, like Charles said before, if they you qualify, not going to the highest amount that you're qualified for, but to be sensible and do a little bit under, because you're going to need to be prepared for that. So I
Right,
think that's big. I think
right,
that's really big.
right. I mean, you got to be careful, prepared for the future.
Yes.
Just because I can qualify for a $2,500 payment, am I considering? Am I considering plumbing? Gas? Am I considering all the other
Yep.
things that go in with this
Taxes.
home?
And
Oh,
yep.
absolutely.
Yep.
Yes, taxes. They are true. They are real. And depending on the area you are, you got to look at what that tax base is. And
Mhm.
actually, this is another question thing.
Yeah.
Having a realtor that has local community knowledge,
Yeah.
like I think it's ultimately important. What are some of the things that you see from people that go from one area to another, or that actually don't have that knowledge of what's going on in that community?
Yeah.
This one is so fluffy.
He is fluffy. He is fluffy. He's a Great Pyrenees. He's 130 pounds of love.
Oh, I can tell by the fur.
Yeah.
Great Pyrenees breeds have this fluffiness.
Yes, they are awesome. They are awesome. This is Percy, and he's a great boy.
Like Percy Jackson.
Yes, yes, he's got that type of power.
Are you rehearsing for something?
Oh, we're
Yeah, we're
we're
doing
we're
a
recording
video.
a video for TikTok.
Oh,
So
yeah, about dogs?
No.
about money.
Yeah.
You like money?
Not not as much as dogs.
Okay,
Good.
I
Okay.
I, I
Good.
love that. That's
Right.
good.
Dogs are more precious. They love you back, unlike money.
Yeah.
Truth. That
But
is very
you need a
true.
little money
Thank you.
to keep a dog.
I pay a well, not so much money. There's inflation, but the value of dogs can never change. Unlike money with inflation.
There you go.
I love
There you
it.
go. Yeah.
Dogs do not change in value because they love you and they're afraid.
Yes. All right. I love that kid.
Um,
So the questions here. Um,
so I think
local value, local
when I'm looking
knowledge.
at different areas, I live up in the Prosper area, so above north of that, it's going to be Salina. It's going to be, you go to Gunner, and you get all these other areas. Well, a lot of new home builders are building out there, and some that are already existing, but they'll have not only their local taxes, but they'll also have a HUD. I mean, I'm sorry, a PID or a MUD. They're in a MUD district where they have to pay. It's like an extra tax. So you need to know what areas there is. I've got a house now in McKinney, and that house doesn't have a city tax. So their taxes are actually even lower than the normal people that pay for the city, school, county
Yeah. What
taxes.
what house is that? And where is it? No.
6904 Tigers, come back, come over and take a look.
Because I will tell you. I mean, just personally.
Yeah.
Now, in full disclosure, I have not listed or purchased a house from Mario as
Mhm.
of yet. But my one of the things that started us doing these videos on major purchases was about major life events, and we just had a major life event. My youngest son just graduated high school. We have a large house that we don't necessarily need anymore. Not necessarily, we do not need this size of house anymore. So the thought is now, well, are we going to sell that house,
Yeah,
get a little
downsize.
bit smaller, downsize, and find something in an area that is a little bit more, tax friendly.
Well,
Because frankly, I got to tell you, our house has been paid off for many years,
Yep.
but our taxes are more than what our house's original mortgage was.
Yeah. Yep. And that is one of the that's one of the issues that's going around, especially for those that are retired or the elderly who have a home that's been paid off for many years, and those taxes are killing them. They're
Yep.
killing them, and there needs to be something done for them. I know they've got certain um, exemptions that they can take, but at the same time, it's pretty high, and they're having to pay quite a bit more.
Right, right, right. So
Mhm.
so looking at the area where you're in, even if it's in a district that you could move a few blocks over, your tax base, your taxes may be dramatically different from being in, let's say, Collin County,
Mhm.
to just being a few miles to the
Grayson
to the
County.
west to be
Oh,
in
mhm.
Denton County, or going north and being in Grayson County.
Correct. Yes.
Your taxes could change dramatically. So it's definitely
Mhm.
something to look in the areas that you're looking for, to make sure that you have somebody with knowledge that knows, look, the type of home that you're wanting, the
Yep.
type of area that you're looking for, you can get this similar thing right here if you just drive a couple of miles north.
Yep. Exactly. Exactly. I mean, and also is you want to know if you do try to find out what is coming into the area, what's nearby, any new ventures or whatever that are coming through for that specific area that a person might be looking at a home.
Right, right.
Mhm.
I know, off leash dog park, there's some barking going on. It should happen. Percy is going to go investigate, and I think we're going to be fine. So, Mario, here's a question I get all the time,
Mhm.
and it's really because of rates. Should I wait to purchase a home, or should I wait to do something until the rates drop? And I got to tell you, my answer is always no. Like the rates ebb and flow; they come and go. What about when we're talking about being in a buyer's market or a seller's market?
Yeah.
Should that be something that they should wait to consider?
I, Me personally, I always say no. It is not. Houses are still going to sell either way, whether it's a buyer's market or a seller's market. When it's a seller's market, the prices of the home are going to be higher, and even though the interest rate might be lower, the price of the house is higher. In a buyer's market, rates might be a little bit higher, but the price of the home is going to be lower. Matter of fact, around the whole area, I mean, there have been lots of homes that have been reduced. And I think the best thing to do is that since the price of the homes are low now, this is the time to buy. And then when the rates go down, you can refinance and you can get yourself into a lower rate.
Right.
But initially, now you're getting into where the house the cost of the house is a lot lower than it normally is.
Yeah,
So,
I think we're kind of in a unique
mhm,
time right now,
yeah,
because, well, I know people are looking at the rates are being high. If you look historically on rates were 14, 15, 18% on prime perfect borrowers.
mhm,
We're paying that. This has been several years ago, but the historical, if you looked at the data of the rate, we're looking at probably an average of 8%. So us being well below that, and the market, actually the housing market, going down just a little bit, where there's some extra value in there, you can finance less. Over a life of that, it's going to save you some money. And let's say the rates drop down to 2 or 3% again.
mhm,
Refinance it, you're going to get all of that back right there.
yeah,
Like it's awesome. There is one important thing that I also like to tell people about, is this: are you buying a house, or are you making an investment? A lot of we say it's the largest investment that you're ever going to have. But are you buying your home that you're going to live in? It's a completely different mindset of, I'm buying this as an investment, or I'm buying this to live.
yes. Yes, that it is important to look at it that way. But if you're going to be there for the long haul, then it's an investment because it's going to go up in value. You're going to make some equity, and it's going to be in the long run. It's going to be a great investment.
Right.
Um, but another thing, back to the cost of the pricing, you can also, if the prices have been reduced some, you can actually negotiate and try to get some extra money. But instead of using that money to reduce the price of the house, you can use it to buy down the rate, and now you get a little bit of the both.
Right.
You know,
And I say this on almost every one of my videos. Do the math. is the buy down on the rate going to actually save you, or is financing less going to save you? Because a lot of times the rate isn't the enemy, it's the amount you finance and how long you financed it for. So do the math, because math don't lie.
That's right. Math don't lie.
No, so Mario, it's such a pleasure. We got some other friends coming in. Such a pleasure. Thank you for joining me out with my big fluffy dog.
No, thank you. It's been great. It's been fun.
Well, let's go have something to eat.
Awesome.